Hello and welcome to this week's episode of A New Look at Your Investment with Newlook Capital. Jordan and I are pleased to be joined with Newlook's very own Sean Fontyn.
Sean, Senior Analyst at Newlook Capital, is here to talk to us about all things Newlook Dental Services Trust Fund. Sean will talk about the performance of the fund pre, during, and post-COVID, along with the little details about himself and Newlook Capital. Sean, thank you so much for joining us today. We're so happy to have you.
Thanks, Sean.
Jordan, Allison, thank you for having me on this episode. My name is Sean Fontyn. I have my CPA, Certified Management Accounting designation, and I've worked at Newlook for 6 years. My development at Newlook stems from working numerous roles, including but not limited to operational accounting, financial analysis, acquisition valuations, and integration. Currently, I work on the investment deal team under our Chief Investment Officer, Abbas Osman, and our Managing Director, Oliver Bloom. In addition to acquisition and integration, I oversee and support the dental fund through financial reporting, management discussions, and banking relationships. Now, before I begin, I'd like to point out that at Newlook, we pride ourselves on providing timely and accurate information to create transparency to build our relationships with institutions and advisors. It is important for us to stay connected with you, whether it be through the sales team or through the investment deal team, because we believe this open communication will build investor confidence in Newlook. At Newlook, we are invested, not only financially, but operationally. Now to begin, I'd like to discuss performance of the Newlook Dental Fund over 3 distinct timelines. First, pre-COVID performance. Second, current performance over the last month or so. And lastly, post-COVID expectations and outlook. With each timeline, I'll speak to the clinical performance, our fund strategy, while praising our team at Dentallook. As you may be aware, Newlook entered into a partnership agreement with our operating partner, Dr. Sam, to form Dentallook. Dentallook acquired its platform acquisition of 7 dental clinics in August of 2019. Since then, we've purchased 4 additional clinics, 3 of which are in Saskatchewan and 1 in Toronto, Ontario. And just last week, we announced the acquisition of a clinic just north of Toronto in North Bay, Ontario, to make that the 12th clinic in our portfolio. Now, I just want to give you a sense of where all the clinics are located. So I'm just going to share my screen. As you can see, there's 9 clinics in Saskatchewan and 3 clinics in Ontario. So since our platform acquisition in August 2019, we have doubled the business in terms of revenue. When we started the dental fund, we focused on clinics with a proven track record for high margin, positive free cash flow, tied to a strong patient base and long-standing market presence in their respective communities. The current portfolio of dental clinics provides diversification over 2 provinces and 12 different cities. Now, at Newlook, we always focus on recurring revenue. In the dental space, we classify recurring revenue as diagnostic and preventative procedures. And based on that classification, our portfolio is currently running at 80% recurring revenue. That is 80% recurring revenue based on preventative and diagnostic procedures. Now, in terms of employees, the current portfolio of dental clinics consists of 30 associate dentists, approximately 30 hygienists, 8 therapists, approximately 50 certified dental assistants, and 25 office staff. In addition to the clinical staff, we have approximately 15 employees at head office, led by Dr. Sam, that helps support the clinics on a day-to-day basis. In total, the dental fund consists of over 150 employees and services approximately 39,000 patients. Now, I can't go without saying how great Dr. Sam is as a leader and a partner. Dr. Sam has successfully built a competent, professional, experienced management team at head office that earned my utmost respect as I have the privilege to work with them on a day-to-day basis. Now, in March, the College of Dentistry in each province decided, in the best interest of the public, to shut down all dental clinics with the exception of emergency dental procedures. As you can imagine, this was an unforeseen event for the dental fund. The management team had to quickly switch gears from the normal clinical day-to-day operations. Together, Newlook and Dentallook focused and prioritized the following items during COVID-19. 1, cash flow management. 2, government incentives, including the CEBA loan and the wage subsidy. And lastly, and more importantly, the preparation to reopen, which includes order and delivery of PPE, one-time CapEx to repurpose the operatories, and lastly, to train our employees so they're ready for the day-to-day operations in the new norm. Now, in regards to reopening dental clinics, I believe Dr. Sam and his team were pioneers in this sense and did a lot of work in preparation to ensure the clinics were able to protect our employees and service our patients safely as soon as the college were to give the green light. In fact, 2 weeks after reopening, Dr. Sam and his team led a webinar called Coping with COVID-19, sponsored by Sinclair Dental, one of the largest suppliers in the dental space. The webinar focused on the step-by-step approach to reopening a dental practice catered to all stakeholders within the dental industry, including 1,200 dentists that actually participated in that webinar. As most of Canada was still focused on trying to flatten the curve, Saskatchewan was the first to allow dental clinics to reopen their doors. Fortunately, our portfolio includes 9 out of the 12 clinics in Saskatchewan, which is one of those provinces that didn't see the significant upsurge in COVID-19 cases compared to other parts of Canada. Therefore, most of our clinics were only closed for about a month and a half. Earlier this month, Ontario moved to phase 2, which allowed dental clinics in Ontario to reopen. Not surprisingly, our dental clinics in Ontario have thus far ramped up almost twice as quickly as the clinics in Saskatchewan, which is likely due to the demand, population density, and the learning curve through our experience in the Saskatchewan clinics of reopening. As of today, our portfolio has hit 80% of the pre-COVID average daily production, and we continue to see this improve on a day-to-day basis. Now, throughout this time, we continue to focus on the fundamentals of our strategy while focusing on cash flow. The most recent acquisition in North Bay, Ontario reflects that, and the price paid was based on the cash flow and the ability to pay debentures, which considers the impact of COVID-19. The structure of this deal is expected to improve our cash flow coverage ratios in order to pay those debentures. Again, we are truly excited because this acquisition enabled us to meet our year 1 target of doubling the business before July 31st of 2020. Currently, our staff at the clinic level continue to manage the clinics based on the new norm until further notice. This can be a challenging time for our employees, so we continue to train and educate our employees to cope with the temporary adjustments, and we can see the results. We acknowledge and praise their continued efforts to protect the public while servicing the basic needs of the families in their respective communities. Our goal is to continue to educate our patients, to build and improve our patient relationships and the overall experience from the day they call the clinic until the time they leave the clinic. Since the first clinics reopened, we've had some time to reflect on the situation. Either A, we eventually go back to normal business operations, or B, we end up with COVID-19 guidelines that will become the new norm within our industry. If this is the case, we would expect that the guidelines and procedures will be reflected in the fee guide moving forward. It is difficult to test and identify whether an individual is active with an infectious disease. Therefore, we have to treat every patient as an active case with COVID-19. Similarly, during the outbreak of HIV or even the viral hepatitis, dental associations and safety authorities recommend that dental clinics abide by a standard set of procedures and precautions for all patients at all times, assuming that each patient was an active case with an infectious disease. It became the new norm, which focuses on maintaining the utmost safety and due care of all patients and our employees. We are dealing with challenging times, but we see this as an opportunity to shape the identity of our clinics and shape the identity of our management team. In regards to growth through acquisitions, we continue to manage a strong and healthy pipeline. More dentists are willing to sell, given the financial situation and or their limited depth of management through a COVID environment. Clinics are open, therefore Newlook is an active and willing buyer even throughout this situation, as our strategy always falls back to cash flow and the ability to pay debentures. In summary, Newlook remains active in acquisitions with a strong and healthy pipeline throughout COVID-19. And with the most recent acquisition, we have now doubled the business in year 1. In regards to operations, our clinics are ramping up production or top-line revenue quicker than expected. And we have a team at head office as well as at the clinic led by Dr. Sam, who has proven himself to be a market leader. I hope this video has been very beneficial to all viewers and it helps you get a better sense of the performance of the dental fund throughout COVID-19 and our vision moving forward. Again, thanks to Jordan and Allison for having me on your show.
Thanks, Sean. That was very insightful. As always, if you have a question or topic you'd like explored on an episode of A New Look at Your Investment with Ali and Jordan, please let us know. We'd be happy to dig into that for you.
Thanks so much, everyone. See you next time.